Good morning, girls, corporate accounting girls. Now, let us solve today another problem on internal reconstruction. As I read out the problem to you, please concentrate. Okay, what is given? Paralyze Limited, which had experienced trading difficulties, decided to reorganize its finances on 31st March 2005. The balance sheet is given to you, and additional informations are also given to you. So as per the additional informations are concerned, you're given preference shares are reduced to 75. Equity shares are reduced to rupees 12.50. Remember, equity shares, all the equity shares are reduced to 12.50 per share. For this, for the third adjustment, there will be some workings. Okay, I will show you the workings also. The balance in capital reserve to be utilized in full. That means what? The amount of capital reserve will go to capital reduction. Plant and machinery to be written down. Okay, profit and loss account written off. At the same time of the resolution to reduce the capital, the authorized share capital also was divided, and as soon as the above resolutions had been passed, 5,000 equity shares were also issued at par for cash payable in full. Upon application, the same were fully subscribed and paid. You're required to show the journal entries and prepare the balance sheet. Okay, this is the problem given to you. I will be sending you a picture, don't worry, the entire problem, okay, of the entire problem, and I think you will be able to understand better once you read the problem on your own. Okay, so the solution is also, I have already solved it. This is a solution. First of all, what happens? 6% cumulative preference share capital, which is of rupees 100, is reduced to 75. So it will be 6% cumulative preference share capital rupees 100 to 6% cumulative preference share capital 75 to capital reduction. So 37,500 will go to capital reduction. Apart from that, we have equity share capital rupees 100 is reduced to 12.50. So the balance of 88.50 will go to capital reduction. These things I am not supposed to explain, okay? You already know. It was also mentioned that the entire amount of capital reserve is utilized. So capital reserve account debited to capital reduction. That means capital reduction account was written off. Similarly, capital reduction account debited to plant and machinery account. How much is the value? What's the value of plant and machinery? 2,10,000, isn't it? It is written down to 75,000. So the difference will be shown here. Okay. The difference will be shown here. Then bank account. See, this is the adjustment given to you. As soon as the above resolution has been passed, 5,000 equity shares were issued at par for cash in consideration. Okay, and the same were fully subscribed and paid. So for this, what happens? You have to pass this entry: bank account to equity share capital account. Applications received on 5,000 shares at the rate of rupees 12.5. Why? Because it has been reduced to 12.5. No, so it will be taken at 12.5. 62,500. Then again, equity share capital account debited to equity share capital account. Application to capital account will be being application money received. Then capital reduction account debited to profit and loss account, goodwill, and preliminary expenses. Okay, these things are written off. It will be transferred to capital reduction. And last but not the least, I just want to show you a calculation. It's very important. Okay, look into that adjustment. 1 rupees 12.50 equity shares to be issued at rupees 100 of gross preference dividend arrears, and the preference dividends had not been paid for 3 years. So how much is the preference dividend? How will you calculate? Preference dividend will be 6% of the preference share capital. So 6% of 1,50,000 is equal to 9,000. Preference dividend are not in arrears, have not been paid for 3 years. So 9,000 into 3, 27,000. Okay. Therefore, for, as given in the question, for 100 rupees preference dividend, For 100 rupees preference dividend, what is given? Equity share is 12.50. Therefore, for 1 rupee preference dividend, equity share is 12.50 divided by 100. Therefore, we have calculated here, no, for 27,000 preference dividend along with arrears, what will be the equity share? Equity share will be 12.50 divided by 100 into 27,000. You are getting how much? 3,375. So this amount of 3,375, for this you have to pass this entry, that is capital reduction to equity share capital account. Okay, it will be, okay. So how will you calculate 3,375 divided by 12.50? You're getting 270. So being issue of 270 equity shares of at the rate of 12.50 each, fully paid to preference shareholders in settlement of the claim for arrears of preference dividend. Isn't it? Or in other words, 27,000 rupees is the total preference dividend, which I have already calculated here. Okay, on this 1/8, if I calculate this, this will be equal to 1/8 of the total amount of preference share capital, which will be going, preference dividend, which will be going to capital reduction account. So in such a case, capital reduction account will be debited always to equity share capital account with the amount of 3,375. Okay, with this I finish all the journal entries. Please try to understand the video thoroughly and prepare the journal entries. Balance sheet I will solve and I will explain in the next video. Okay, thank you, girls.